So we'll start with section one, which is the market analysis. And this week we'll start with Nifty again, just like last week. So we'll recap what we discussed last week. So before that, let me check the candles. So 27th, 26th was the holiday, that is Thursday, and then 25, 24, 23, done. So we have a 4 day week, which is a small week as compared to the prior one. One, two, three, four candles. Perfect. So what has happened is basically this was a bad week overall with respect to geopolitical tensions and other scenarios that are ongoing. But we discussed last week that the market is kind of extremely oversold and there might be a slight opportunity or possibility that a short-term reversal recovery might happen, right? But as we say, the war has not yet stopped, and there are ongoing issues on the ground. So every day when such things happen, it impacts the market, and more so for the Indian market because it impacts the oil, and oil impacts everything with respect to the local consumption as well as the industries uh, that is supported on the oil, right? So the price, I think the crude price is still around 110 or something. So that's still bad. And the Indian rupee is weakening against the dollar. So these two are kind of double whammy for the Indian market. And that is why we are seeing some bad reaction, really bad reaction for the Indian market as compared to what is happening in the US market and elsewhere. So things are really bad in our case. Now, the pattern that we are seeing for last few days is this one. So there happens to be a sharp downfall every time. So for example, one wave down, second wave down. So it tried to fall for the third time. But every time when it falls, right, there happens to be 2 or 3 days at max of reversal recovery. Like we can see 1, 2, 3. So it took resistance around this one. This time it gapped down, then again recovered and reached to this point, right? So it tried to recover above the short-term moving average, but again, Friday was a bad day where we again moved downwards and the volume was again high, right? So it was a really bad day on Friday, and most of the gains that we had in these 2 days, right, it seems to be lost in just one day. That is the scenario in the market. So one thing that people might appreciate right now is they might think that the portfolio might outperform based on the reversal recovery. It's never the case, actually. Okay. So one golden rule that is usually followed by me in case we are trying to find a bottom or we are trying to estimate where the bottom could be and reversal recovery might happen. So in that case, actually the index might work better as compared to the whole portfolio. For example, if the small cap index has a recovery of 5 to 6%, then the portfolio might not match that kind of gains, right? So that is the reality across the indices like NSE Nifty, Sensex, Midcap, Small Cap, whatever index that you pick up, it's the same scenario. Okay. Now coming to the current scenario, things are really bad, and we can see that uh, things are really bad, and we can see it's not working out for the market, right? So we have to ensure that we are following the right risk management, right? Without that, it would not work out. So when you see this scenario, right? So when you see this scenario, we have to be cautious of taking a bold call, as in we would not call out specifically a bottom, right? That's kind of prediction that might turn out to be true or may not. But based on data and everything, we can certainly call out some sort of bottoming scenario, right? So that would be a scenario analysis and not the actual saying that, okay, this day is the bottom and things like that. So right now, what's happening is things are really bad. The India VIX, right? The India VIX that is being tracked on a daily basis, and say we will discuss again in our second section. So that's kind of elevated right now, which is standing around 26. So 26 is one of the highest values of India VIX in last few weeks, and that indicates that the situation has not not been uh, better to say, or it's not so good, is what I can say. high India VIX is not so great actually. It might lead to further deterioration in case of the value, and then further we can see sharp volatility coming up, right? So, okay, coming back from India VIX that we will discuss in the second section. So, right now, the index is below all the key moving averages and everything is falling down. So, again, that's a bad scenario. Right now, what we have to see, we have to see that this day one, right? So, as a rule, right? So, as a rule, one has to follow which day is kind of the day one, and thereafter, we have to see if follow through day happens during the fourth to seventh day or not, right? So if this is day one, right? So there is a specific condition for day one to happen, right? So this day met those conditions, and this was day two, and this was day three. But as we can see that the Nifty is falling in its own weight, and the low of 22,624, right? We'll look forward to tomorrow and day after if 22,624 is being maintained or not. If the low of this day is broken, right, then the downfall continues. As simple as that. We would not ask any question. We would not say, okay, bottom is there, or predict, okay, P of Nifty is this. Doesn't matter. Nothing matters. Okay. Now, 22,600 and something, this one, right? So we have to look for the holding of this low. If it happens, it's good. If not, then we'll have to look for another alternate day one if it happens in future. But right now, it's highly probable that if the market continues to fall and due to the geopolitical scenario and under its own weight, right? uh, there is high probability that this low might be broken. Okay? We have to accept that fact, and we should not be ruling out that scenario. So coming back to the index, right? So again, it's falling under its own weight. So update number two is there's a small gap remaining. So we'll have to see that thing. The low is 22,471. So I'll show you that gap, right? So this gap. 2,400 high is 22,468, right? So this is the high, and this low was 22,471. So basically, by 3 points, it missed to fill this gap, right? So this gap which was present during this day is kind of missed. And this is kind of a great gap up that happened during that time, and that led to a short-term recovery, right? So from the closing point of 22,800 approximately, Nifty made a high of 26,000 and 373, right? So that was a nice move. But again, this gap was open. And during this whole time, we used to discuss that it should fill this gap as soon as possible, because the further it goes from that gap, the bigger the pain it is, right? And that pain we are feeling right now. That Nifty made an all-time high again, 26,300 something. And thereafter, it has reversed back 15%, right? That's really bad, only to fill this gap, right? And beyond that, there is one more gap, is what I can say. Yeah, this one. So this is kind of a sharp decline of 3.2%, and thereafter it bottomed on this day. Okay, this was kind of day one. This was day one, and then day two, right? So the low was 22,270. This high was 22,254, right? So there is a gap of 16, kind of 16 points gap in here, right? So there are two gaps present right now. One which we have missed to fill by 3 points, and the second one is there, which is around 22,254, right? So these two gaps are very close. I mean, if the Nifty falls further by 600 points, then these two gaps would be filled nicely. So I feel I can say I feel that under the scenario that the kind of fall that we are seeing in the market is it's highly probable that the market could or the index could fill this gap. So we'll have to look out for 22,254. Okay. Scenario number three. Scenario number three is again, we had double bottom last time. So this low was 21,964. And we made a low just undercutting 22,000, and then 21,743 was the low, right? So it was a very nice double bottom and a sharp reversal recovery. So let's see if we can have a triple bottom or something like that. So obviously there are a lot of support zones around this one. So this place we had support, this place we had support, and right now. So as close to 22,000 and below, right? There has been multiple shakeouts. For example, one can see at this point of time. So this one, right? We had a nice shakeout. Nifty fell by 5.9% and then recovered kind of and then made a nice all-time high. And then we had this shakeout, right? 3.2% gap down and then a reversal recovery. So basically what happens that around the bottom, right, there happens to be a sharp shakeout when the world kind of ends. For example, if those of you guys who might remember the COVID days, right, Nifty used to fell 8% to 13% intraday, right? So that was kind of a bad decline that used to happen. We have not seen such a decline in last 2 years to say because the last one which I showed to you was around 5.9%. And thereafter, the recent one that happened was this one, like 3.2%, right? And again, we are close to April, right? So, okay, again, another scenario, Feb to April is a very bad time, actually. Okay, the market falls like crazy. The market peaks out around Jan mostly and then starts to keep falling and it aggravates around Feb, March, and then some bottoming happens around March, April. Okay, we'll have to see, obviously, what happens this time. I'll not call you to this point that okay, calendar is right or we can go by calendar. It's not that. It's just that timing matters, right? So right now, three things are important. Number one being if that gap is being filled or not. Number one, there are two gaps: one small gap, one large gap. Not so large, but 16 points gap that is there. Second point, if Nifty would try to hit 22,000 and thereafter a sharp decline happens and then a reversal recovery starts, right? We'll see. Like we are just discussing a few cases, right? That is number two. Number three is earnings, right? So that is an issue that I see right now because a lot of companies might be impacted due to this oil thing. Okay, there are a lot of industries which are impacted due to this oil scenario that is happening right now. So that is one. IT is kind of dead, right? No one is talking about IT, Anthropic, and all those things that have happened recently has made sure that all the biggies, right? Accenture, TCS, Wipro, Infosys, HCL, whatever name you pick up, if anything, right? Everything is lying on the ground, nothing. So IT is kind of dead. Then we have banking. There are a lot of issues that are ramping up in the banking scenarios that you might have seen recently with respect to the private sector banks and elsewhere. Again, major indices are kind of not so doing great big time. So earnings is kind of the last hope right now that we have. It's kind of starting in next 2 weeks. Okay, and we'll have to see if that thing is good. If earnings are good, then obviously we'll have a very good scenario in the market where the valuation would be very nice, right? So that would be one scenario. If things are not so great, then obviously what is coming, right? So, and the last update with respect to index is right now the index has fallen only 14%. Okay, why I'm saying only? This only is because with a lot of emphasis, uh, the stocks are kind of down 50 to 60%, even 65%. Like if you pick up an average or a weak small cap stock, right? That stock has fallen easily 45% to it's there, 50, 60, 65% it has fallen. But the thing that you are seeing in the Nifty, right? It's only 14%, right? So people might say, okay, then the stock in your portfolio should have fallen only 14% or 20% at max. It's not the scenario right now. Actually, there are stocks which are falling for last 2, 3, 4 years, and they are sideways for 5 years, and they've fallen more than 50% or around 60, 65%. And this fall is exactly similar to what we have seen during the 2018 to 2020 small cap and mid cap fall, right? We'll discuss that later on somewhere when we see something happening. But right now, let's park it for the later time. Now we'll look into the mid cap ETF. It's kind of again weaker than the uh, main NSE Nifty, but 17% decline is not much. I mean, it was kind of wedging up and then it fell like this one, and then we'll see where it kind of settles or bottoms down or something. So there is further scope for further derating or further downfall to happen in this case. So let's see. I'll not discuss anything further because it's a fresh downfall, right? So it's kind of a dead cat bounce, which means that it was a decline started from this point, and thereafter this week it tried to recover, and then again it was rejected. and it closed towards its lower closing range, right? So that is kind of weak again for the mid cap, and it seems that this fall is starting right now. It's not that it's in middle of the fall or like Nifty, it is kind of end of its decline. It's not nothing like that, right? So next is small cap. This is very interesting. So basically, the small cap chart is very, very interesting where one can see actually undercutting the lower one, right? So that is the scenario. And as you can see that this is one decline, this is one leg down and it went up forming a W formation. And then this is the second leg down right now and it is forming a double bottom kind of scenario. So again, with respect to NSE Nifty mid cap, the small cap index is forming a nice double bottom formation where the low of 37.45 has been undercut by some points, right? Some uh, 0.10 or like that. So it's kind of minuscule, but still, it's kind of a nice formation where we can say that it is close to its lows, right? So if you see a long-term chart, so for last 2 to 3 years, the small caps have gone nowhere, right? So if you look at any average small cap and stocks like that, those are kind of stuck. Okay, valuations are kind of stuck, but there are growth names out there, but there are pockets in the market that are doing fine. There are pockets in the market which are not doing fine. That's all fine, right? But with respect to index, this kind of a great level, which I can say, and there are a few ETFs, right, where one can look into right now with obviously a disclaimer that those are for understanding or educational purposes, right? So, so that is the scenario. And right now, coming back to concluding this section. So, in section one, we have discussed about NSE Nifty, mid cap, and the small cap scenarios. So, the NSE Nifty is kind of very weak right now, where we have discussed the probability that there are two gaps pending on the downside. The scenarios are not yet good with respect to geopolitical things that are happening across the globe. The crude oil, the price of which is still hovering around 110, right? One more thing, okay, it came to my mind right now, and one more thing that is happening is people are speculating big time right now. For example, the government has indicated that we have to prepare, and our preparedness should be like what was there during the COVID scenario. Now, with respect to that, people are thinking, okay, there might be a scenario of lockdown or something like that. I don't believe that lockdown might happen. What I could understand is there are scenarios across some smaller nations, for example, Philippines, uh, this Sri Lanka, Cambodia, and elsewhere, which is highly dependent on the oil being transported from the Middle East. So basically, they have diverted towards work from home, right? So this is one scenario which I believe that after this government has taken the haircut on this excise duty on this petrol and the diesel, we don't have much scope remaining, right? So the government cannot take all the burnt altogether for a long time, right? For last 2 to 3 weeks, they have been holding, but right now they have taken the cut and the burnt they have taken on themselves, and they have not done the price hike for the consumer. The next scenario could be, I think there might be a probable circulars or something that might be issued or guidelines that certain industries or, for example, metro cities where commuting is a big time issue, right? People take cars, buses, and other things to just commute to their work office and stuff. People might be indicated that they can do work from home, and then obviously such things might reduce. Okay, that is one scenario. I don't know what would happen, but these are speculations as of now. Now, coming back to again same things. Anything that is bad or indicatively bad right now would be taken as a very bad scenario. Okay, there are actually no buyers in the market, and anything that is bad is being hit badly. Okay, so I'll conclude this section and I'll move to section two.